Hello everyone. We are the students of Kathmandu University School of Management, the batch of MBA Spring 2021. We, the members of five, would like to invite you on this journey of understanding and interpreting the annual reports of public entities. Before we jump directly to the annual report, we would like to make it clear that there are various sectors of public entities in Nepal, and the structure of the annual reports of the public entities may change with respect to the sectors that they are working, but the main theme of the annual report does not change with change in sectors. And if you understand one of the annual reports, you can interpret the others. So without any further delay, let's begin. The annual report of the public entity contains information of the board of directors. Who are the members of the board of directors? What are their qualifications, their experiences? And also it has a section for the management committee. Who are the members in the management committee? Who is their sales manager, finance manager, chief executive officer? Moving on to the notice for AGM. In this section, there's information of when, where the next AGM is going to be held. Also, there's information regarding the general agendas that will be discussed in the AGM. These agendas are approval of directors' report, approval of proposed dividends, and appointment of auditors as per section 111 of the Company Act, and also selection of the remuneration of the auditor. Also, it may contain some special agendas that will be discussed in the annual general meeting. This could be increase of authorized capital or the talks about mergers and acquisitions. Another section of the annual report is a letter from chairperson, where the chairperson, on behalf of all the board of directors, would address the shareholders and report the achievement in current fiscal year. Also, it gives information about the cash dividends and the bonus shares that have been proposed. And this letter contains several other information and ends with gratitude towards all the various stakeholders. Now, moving on to the report of board of directors, they contain several information regarding the summary of the financials, the major businesses challenges, whether be it global or economic, and how they have tackled those challenges. It talks about the future outlook and objectives of the company. It talks about the policies that the entity has adopted to ensure good corporate governance. It talks about its HR policies and the internal control framework that it has applied to ensure uh, lawful conduct of the business. And also it performs SWOT analysis in this section, and it also ends with acknowledgement to various stakeholders. Finally, there are some disclosures that are mentioned in this annual report. The disclosures are related to the various acts and rules that should be complied by this company, and they are the Company Act, the Securities Registration and Issue Regulation, and finally directives related to CG for listed companies. Finally, the most important section is the independent auditor's report. This section is very important as it provides the opinion of auditors regarding whether the financial statements give a fair representation of financial condition of the company. This section talks about the opinions of the auditors, the basis on which they have formed those opinions, and the key audit matters that the auditors think were most significant while auditing the financial statements. With this, I would like to request my colleague to further talk about the financial statements and how to read and interpret them.
So now let's have a look at the financial statements of the company. So the financial statements of the company are usually made up of five main statements. We have the statement of financial position, statement of profit and loss, statement of comprehensive income, statement of changes in equity, and finally the cash flow statement. So basically the balance sheet is a financial report that gives us the snapshot of the assets, the liabilities and the shareholders' equity at a specific point in time. So these three aspects make up what is known as the balance sheet equation, which is also known as the accounting equation. So this states that assets equals to liabilities plus shareholders' equity. So the balance sheet is split up into 5 sections, that is the current assets, the non-current assets, the current liabilities, non-current liabilities and equity, which is also known as the shareholders' equity. So here in the screen you can see that there are two heads in the balance sheet, that is the assets and the liabilities, and you can also see the column of notes where the numbers are mentioned. So this notes provides in detail information about that particular item in the balance sheet. So assets is anything that a company owns, and for any company their assets could be the land, the building, the machinery, cash, goodwill and so on. Also the liability side shows what a company owes or what are the obligations that the company has, for example the long-term borrowings or the short-term borrowings, accounts payable, tax payable and so on. So the next financial statement is the income statement. So this is also known as the profit and loss statement. So basically this statement is the summary of a business revenues and expenses over a period of time. So the items on the top lines consist of the cost of goods sold, revenue and gross profit. So when you scan down the income statement, the operating expenses are deducted from the revenue, and in the bottom line of income statement it consists of the amount that the company has made from the sales after taking into the accounts every expenses. So now let's understand about the comprehensive income. So what does comprehensive income really mean? So while comprehensive income is not typically a new statement, it is actually an income statement which replaces the PL account, but here the breadth and the depth of the statement has increased many fold times. So the main purpose of this statement is to show a company's true income by listing the income that is not yet realized and not reported in the income statement. So the other comprehensive income items includes the revenues, the expenses, the gains, the losses that have yet to be realized and are excluded from the net income on the income statement. So a common example of other comprehensive income could be a portfolio of the bonds that haven't yet been matured and consequently have not been reddened. So now next statement is the statement of changes in equity. So this statement is the reconciliation between the opening balance and the closing balance of the shareholders' equity. So here basically it is the statement that summarizes the transactions which are related to the shareholders' equity over an accounting period. So the movement in the retained earning, other reserves and changes in the share capital such as the issue of new shares, bonus shares, payments of dividend are recorded in the report. So last statement we have is the statement of cash flows. So the cash flow statement is used to determine the company's information on the liquidity and also the solvency. So it is used to determine if the company has enough funds or liquid assets to make any debt, or it also tells us the amount of cash inflows and the cash outflows of the company, therefore showing us how much cash does a company has on hand to make the necessary payments. So the cash flow statement is split into 3 main sections. First one is the cash flow from operating activities, second one is the cash flow from investing activities, and the third one is the cash flow from financing activities.
This video was made taking reference of Manjushri Financial Statement. Special thanks goes to Kusum and faculty member Hari Gopal Rizal sir. Also special thanks to SlidesGo. Further detail about software used for preparation of this video, check the description box down below. If you have any queries, do comment us and don't forget to like and subscribe.